Good afternoon, everybody, and welcome to today's tax investigation webinar. Very pleased to see everybody joining us live, and this is also being recorded, so you can watch it again at your leisure, or if you're watching it for the first time on recording, hello and welcome to the recording of the tax investigation webinar for the 12th of October. Today, Dane and myself, Dave Jennings, are going to discuss the COVID grants, HMRC's investigations of COVID grants and alleged or actual fraud around the grants, and a quick refresher because it's linked obviously to fraud, Code of Practice 9, which is fraud investigations. COVID grant inquiries may end up as Code of Practice 9 investigations or as voluntary disclosures. That's possible too. So for those who haven't seen us before and don't know us, we're both ex-HMRC and both top 10 firms of accountants as well, and we've many years experience on both sides of the fence dealing with investigations, disclosures, inquiries, disputes, anything to do with HMRC. We use our skills and experience from many years, in my case, many years of investigations for clients and in HMRC as well. So we keep up to date with case law, and we're aware of various issues in the investigations world. So without further ado, I will start our presentation today. So that's us two. As an introduction, Churchill Tax, we do provide full services. We do accounts, compliance, tax planning arrangements, as well as inquiries and investigations. We help people with property portfolios as one of our particular specialists, trusts and inheritance tax as well. Please speak to our colleagues if you need any help that's not investigations related. And we work alongside accountants, IFAs and solicitors for their clients as well. It's not just our own clients or people who contact us direct. We do work alongside and do as much or as little as required to work with other introducers and advisors. We obviously have no interest in taking those clients. We're there just to support and help extra services, specialist services to advisors. So today, as I mentioned, COVID fraud and Code of Practice 9. So what does COVID fraud involve? Obviously, many of us have been through these last 18 months of difficulties, both personal and business problems that people have had. And as you will all be aware and know, the government provided various grants to keep business afloat during that period, both to employers under the furlough arrangement, as it's known, and to self-employed individuals to assist them if they're unable to work because of COVID, and also a bit of a boom last August for the restaurants. So these, I would ask you, if this is a Q&A session as well, you can put in questions. Please type them in and we'll answer some at the end of the session if we get any questions. I would say if this was an open forum, can everybody know all these acronyms? We will cover these acronyms as we go along. The first one being the Coronavirus Job Retention Scheme, also known as the Furlough Scheme. Interestingly, and again, this is in the public domain, it's been reported, there are many businesses, some large, some small, who've actually returned some of their furlough payments. They've decided either as a PR exercise or because they realise they don't actually need the funds. They've returned 1.3 billion to date, has been reported as going back to the Treasury that had previously been claimed. Equally, it may be returns from people who've checked their claims and realised they've made errors and mistakes, and therefore they want to send it back to the revenue before receiving penalties, or it could be from even people who've admitted they've committed fraud on the furlough claims and then wanted to come forward and repay those as well. It's not. I've not seen a breakdown of that, how much relates to just people wanting to give it back because they don't need it, and people giving it back to avoid getting penalties or even worse, criminal prosecution. So the revenue, this covers not just the furlough, but the other grants as well. The revenue have allocated 1,250 staff into a new taxpayer force that is opening the inquiries, running the investigations into these COVID grants. For the furlough, they've issued some 3,000 nudge letters at least. We've covered nudge letters in the past. The non-formal open inquiries, they're giving businesses the opportunity to come forward before the revenue issuing a formal inquiry and in effect make a disclosure. That will still be a prompted disclosure, and therefore that affects penalties. The revenue legislation also states and gives the revenue the backing that if with any of these grants somebody fails to come forward and is inquired into, the revenues and they know that they made a mistake. So the crucial thing there is you deliberately knew you've done it wrong. The revenue starting point is deliberate and concealed for the penalties. So that can be up to 100% of the claim that should be returned back. So pretty hefty penalties if you get a prompted inquiry. Best to come forward. In the worst case, criminal prosecution. We'll cover that within the Code of Practice 9. So what are we finding, and what are the revenue finding as the major errors? Well, it can be either because an employee has continued to work when they've been furloughed because they're not supposed to work to claim the furlough. It could be because the calculations were actually wrong. Either the salary has been wrong or the percentage has been wrong, or it could be that you claim for people who never existed. It could be that they were never on the payroll, or they weren't on the payroll at the right time, or they joined later. There's specific cut-offs for the first tranche of you have to be on the payroll pre-March 2020. Second tranche, you have to be on the payroll before the second major lockdown. And the revenue obviously have the RTI information, real-time information for the payrolls to check that. What obviously happens then is if you've made errors and mistakes or you've committed fraud, then you have to repay any over claims, and the penalty, as we mentioned, can be up to 100% of that repayment. So obviously it can be quite a hefty repayment, but as we mentioned, if you come forward, you can reduce those penalties, potentially even have a zero penalty. But again, that depends on the case, depends on the defence that can be raised. But we do have experience of dealing with these furlough fraud claims. These are probably the slightly more common claims compared to the self-employed grants, which Dane will now cover.
Thanks, Dave. Yeah, so similar to what Dave mentioned, these grants were kind of put in place to support those individuals who file self-assessment returns, essentially, so those who aren't employed, who aren't looked after through the CJRS scheme. It's kind of evolved over the time. I think I heard that for these grants, it normally takes kind of 2 years to get them in place and get the systems in place, and HMRC had to roll these out within a couple of weeks due to COVID-19. So there's been a number of tranches of them over the past 18 months or so. So the five tranches, the last one was the fifth one, coming to an end on the 30th of September. Along with the other support schemes, I think Dave touched on the number of officers they've put in there. They've invested 100 million into a task force to tackle fraudulent claims, and those people that have made them fraudulently, they're looking to crack down on them the hardest. So generally speaking, with the Cs, where the grant received is too much, HMRC needs to be informed within 90 days of receiving the grants to avoid being charged a penalty. It's important that these claims are checked for that reason. The 90 days is quite a key one. The 90-day notification period. There's two elements to this. In the fourth and fifth tranches, it's 90 days from the date the grant was received, unless you've amended a return which subsequently has an impact on the amount of the grants claimed. In that case, it's 90 days from the date in which the amendment is made, and that's for any amendments made after the 3rd of March 2021, and that's only in relation to the 4th and 5th grants. Where it's known, the similar kind of penalties and similar kind of things that Dave mentioned there, where it's known that the grant received was excessive, HMRC, as a matter of course, will treat this as deliberate and concealed, unless you come forward within that 90 days. Now, there is scope where you don't know. It might be a case that you thought the claim was correct. Actually, having it later checked, it might be outside of that 90-day window. There is scope to bring that penalty down, providing that immediate action is taken, and that's something that we can obviously support with in terms of either carrying out those checks or presenting it to HMRC within certain timeframes that are set out. So the deliberate and concealed is a scary part, and that's where you know that you've claimed something incorrectly. Actually, mistakes do happen, and there are avenues to take disclosures down outside of that 90-day window where it's not deliberate and concealed, where say a subsequent check has identified where there's been an overclaim. Some of the common areas that we've seen there is these grants are based on the level of turnover reported in the self-assessment returns. So if somebody's overstated that by including other business income, for example, it's not a true reflection of that business turnover. They might have included property income or some other form of income, even grant income. So it kind of distorts the amount of grant that they would be eligible to receive. One thing that's kind of slightly amusing, I suppose it's quite concerning as well. When these grants were announced, what HMRC were seeing is quite a few people went back to, let's say they historically had underdeclared their sales, their turnover. They'd gone back to amend their returns to kind of maybe present a truer reflection of their business so that they could claim a higher grant. This, I mean, might seem on the face of it like a positive idea to get a higher grant, but with HMRC's assessing powers, all it did really is highlight to them those businesses that have historically shown non-compliance, and would allow them, in the worst, most extreme cases, to be able to go back 20 years to try and recuperate any kind of undeclared sales or profits for those periods. Another thing just to be careful about, kind of briefly touched on it before, is where you're amending a return for those 4th and 5th grants after the 3rd of March, that 90-day window where you know that there's been an overclaim to the grant, that 90-day window isn't from the date the grant is received, it's from the date of the amendment. So you might have amended your return on the 10th of March but not received the grant until later. The 90-day window to ensure that you don't fall within those deliberate and concealed penalties starts from the date that the return was amended, not the date the grant was received. I think that's about it for that one, Dave. Thanks.
Thank you, Dane. Yeah, I mean, as you've mentioned there, if you do the right thing and amend your returns and get a higher grant, then obviously it's not just one return or two returns that the revenue might look to amend. If they look to open inquiry, they will go back for earlier periods as well. So the final acronym is the Eat Out to Help Out grant, which I mentioned was the assistance to the hospitality restaurant trade, where if you spent at least £10 on a meal, you got up to £20 worth of food and drink. So basically, you got £10 free is per person, and inevitably the revenue of again included these for the inquiries. They have opened hundreds of inquiries into restaurants and food business, into again making errors in their claims, either overinflating the amount of persons they've had in the restaurant during August, or a lack of record keeping. A crucial point here in a defence, if the HMRC do open an inquiry into this grant and these payments, is you do have to have good records, not only of the sales, but records of the number of customers and clients who came into the business during that period. And the revenue do look into those claims, they do look into that information. One area that some in the trade may struggle with is the maybe cash sales, people paying cash, albeit during that time, generally people were advised not to pay cash, but inevitably people still did. And again, cash sales, if they've been included in the claim, certainly need to be included in the sales, and there needs to be sufficient information to record and register those sales in order to back up the claim. And as with the other COVID grants, penalties again can be deemed to be deliberate and concealed. So you're facing a much higher percentage, right up to 100%. Whereas standard investigations and inquiries, you may be capped at between 15 and 30%, for instance. 30% might be a maximum, or 50% might be a maximum, depending on your behaviour and how that's treated and agreed with HMRC. Here, with these COVID grants, if fraud has been found or admitted, the risk of the penalties can be as high as 100%. But again, for fraud problems, then Code of Practice 9 is an area that needs to be considered. So with Code of Practice 9, this is the most serious type of inquiry by HMRC, and this is where the revenue either are not prosecuting and are giving you an immunity from prosecution instead of opening obviously a criminal prosecution case for fraud. Code of Practice 9, or the contractual disclosure facilities, it's also known, can be used as a voluntary disclosure. So you can go forward to HMRC and admit fraud even before an inquiry. And again, the advantage of that is you get an immunity from prosecution and you're reducing your penalties. So it can be both prompted by the revenue and unprompted. Either way, the scenario is the same. You do have to admit fraud in order to get the immunity from prosecution. If you deny fraud, the revenue obviously will investigate and you've no immunity from prosecution. You can't make a disclosure, an unprompted disclosure to HMRC if you're not admitting fraud. So if it's just carelessness, then you need to use one of the other type of disclosure opportunities. It does cover a maximum of 20 years. Deliberate behaviour with the time limits goes beyond the 6-year carelessness. It goes up to 20 years. So whether it's a voluntary or prompted, it's a potential 20-year review. Obviously, if the fraud is only for the last 3 years, or if the fraud is only for the COVID period, then it's going to be limited to that. But if you do face a COVID grant fraud investigation, the revenue are not just going to limit it to the COVID grant. They're highly likely to look at other issues, earlier periods, other businesses potentially as well. And what is required, whether it's a prompted investigation or a voluntary unprompted disclosure, you have 60 days after registering on an unprompted, or 60 days after the revenue send you the letter saying they're opening an investigation, to send to HMRC an outline disclosure. So this is where, if you're not denying it, you give full information, make full disclosure of all the issues that you know about, be it prompted or unprompted, and that has to be an outline disclosure which the revenue will then review and either accept or reject. If they reject it, you don't have the immunity from prosecution. If they accept it, you're covered with the immunity, providing obviously you continue to fully cooperate and have fully disclosed all matters that relate to the outline. It does give the opportunity, if you admit fraud, to take control of the investigation and engage with a specialist to compile a report of the tax consequences of that fraud, rather than being on the back foot with the HMRC investigating. Thank you, Dane.
Thanks, Dave. Yeah, I'm just going to talk through briefly the the kind of the process from once you've submitted that outline disclosure and to kind of detail the deliberate conduct or deliberate inaccuracies, and then how that progresses. So first off, HMRC have to accept the outline disclosure. On the basis that they do accept it, within the outline disclosure, there's generally an estimate of the tax that might arise as a result. So they would expect a payment on account to be made. This is kind of an important step for HMRC. It shows good cooperation and good willing to try and bring their affairs up to date. And it starts. You get off on the right foot with a good working relationship. At the same time as that, you'd kind of have an opening meeting, a scoping meeting. And with that, that's to kind of go through what was included within the outline disclosure, and you would kind of identify key areas that HMRC would want the most detail on. That there may be some smaller areas that they may choose to kind of pursue or not, but ultimately it gives a clear path as to what should be included within any follow-up detailed report, detailed analysis, the number of years, the issues at stake, and it gives a clear path. Thanks, Dave. Also set out within the scope meeting, you kind of agree a time frame for providing the report, and that can vary quite wildly. It depends on the number of years, the issue at stake, the number of the amount of analysis that's required and the work required. And those dates aren't always going to be set in stone. You've got that working relationship with HMRC. As long as you have that regular interaction with them to kind of let them know how things are progressing, these dates can kind of be moved back or move forward. And that's the kind of thing that you would have regular progress meetings. Obviously, in the last 18 months, these would have previously been done face to face. In the last 18 months, we've all learned how to kind of have web phone calls, video calls, and that's how they're currently kind of going. But things are starting to kind of revert back to the normal way as well. Towards the end, obviously, after those progress meetings, after everything's kind of come out the woodwork, the analysis has been finalised. You submit the final report to HMRC, which details everything, quantifies everything. There'll be any kind of balancing payments to make if that differs from, well, it will differ from what was submitted in the outline disclosure. And at that point, it's for HMRC to kind of say whether they're satisfied with what's been included, whether they have other information that hasn't really been sufficiently dealt with, and there can be that further back and forth, that negotiation to deal with any kind of further challenges that HMRC might have. And then the final thing, providing that once all of those questions have been resolved, you would have the penalty conversation with HMRC. And the penalty negotiation, the way penalties work, there's different bandings depending on the behaviour. Now with COP9, it always has to involve an element of deliberate inaccuracy. It doesn't mean that there can't be some parts of it that are dealt with as a careless inaccuracy. So the number of years which HMRC can assess and the level of penalties might be lower. But ultimately, there has to be a fundamental deliberate inaccuracy contained within that, and the penalty banding for that would be reflected. Once you've got through the penalty negotiations, and a key part of where you fall within that banding is how good the quality of disclosure is. So if you've been providing information to HMRC in a timely manner, if you've been meeting your kind of progress meetings on time, if you've been submitting to deadlines on time, if you've got the good working relationship with them, where you fall within that banding will be at the lower end. And that's something that we would always strive to kind of achieve. After the penalty negotiations, how you kind of formalise that would generally be by a contract settlement. HMRC would get you to sign up to a kind of a letter of offer, setting out what the amount of tax due is and how you can pay. And obviously, there are situations where you can't pay the amount in full. Another part of the negotiation might be to kind of negotiate a time to pay, a payment arrangement, essentially to allow you to kind of fulfil your obligations in payment, but over a realistic time frame. And then depending on the level of tax due, may decide whether you have to kind of go on their naming and shaming kind of register, essentially, and that's where the tax at stake or the tax omitted previously amounts to £25,000 or more. And as there's a press release in which you would be kind of named and shamed. There's a few areas of HMRC where they try and do this, and that's just another deterrent that they try and impose to change the behaviour. Ultimately, they want people to not take deliberate action to underpay tax. So having these deterrents, hopefully they try and change the behaviour of the taxpayer rather than having to chase them down. Thanks, Dave.
Good, thank you, Dane. Yeah, and also sometimes when you get out of the Code of Practice 9, particularly if it's been a prompted investigation by HMRC, then you may fall under the deliberate defaulters, which requires a greater attention every year. The revenue might want more information sent in with the tax return each year. Don't mean to say you get an inquiry every single year afterwards, but maybe for the first two years or two lots of returns, the revenue will possibly ask a couple of questions or will require more backup information, or some supporting documents are sent in at the same time as the accounts, just to avoid opening a further inquiry if they put you on that deliberate defaulters. That's different to the naming and shaming scenario. So today we've given a high level reminder of some of the COVID grants that the government have given out to businesses and individuals, and now the usual carrot and stick, HMRC are now opening investigations and inquiries into those grants. Apparently thousands of cases have been opened since the start of this calendar year, and we do know that staff have been transitioned from compliance or from giving out the grants to now clawing some of those grants back for those who are not entitled to them, or who made innocent errors or arithmetic errors or some genuine human errors, or didn't realise the claim was wrong until the revenue looked and checked into it, or people who committed fraud and made claims that they were not entitled to and knew they shouldn't have been making those claims. In those cases, HMRC may undertake Code of Practice 9 investigations, or if you've checked your grant, if you've checked your claim and you find out it's wrong, make a voluntary disclosure. If you did knowingly make a grant that you were not entitled to, and again, you might want the protection from prosecution by requesting a contractual disclosure facility under Code of Practice 9. It's not something to consider lightly. It is serious, but it does give you those protections from fraud, and not obviously just COVID fraud. Code of Practice 9 will go beyond the COVID periods and the COVID grants. It will look at other periods of returns, other periods of business, other periods of income that maybe hasn't been disclosed or has been incorrectly disclosed. So that's us today. So I'm Dave Jennings, I'm a director here at Churchill Tax. Please contact us if you need any assistance or help, or have any questions, or Dane as well, or anybody at Churchill Tax, any of the team. Contact the office and they'll put you in touch with the right person. Not sure if we've got, let's just check if we've had any questions through today. It would appear we haven't got any questions through from the audience today. I think we've given quite a bit of information. Anybody who wants further information, needs further help, we're happy to have an initial, no obligation conversation with you and or your client to discuss how we can help your issue with HMRC or to make a voluntary disclosure. Please do join us again in a month's time when we will have a new topic around investigations and disputes. And in a couple of weeks' time, please join our colleagues around tax planning, tax advisory work. Without further ado, thank you for watching the recording, or thank you everybody for appearing live today and watching us in the flesh, so to speak, by way of video. Thank you very much from myself and Dane.
Thank you. Cheers.
Bye-bye.